Estimated taxes. Do you owe them now that you just started a business? Maybe, but the real reasons why you may owe estimated taxes is one of two things. Number one, your withholdings, such as from your W-2, pension, IRA, Social Security, you name it, are not enough to cover your tax liability for the year. Or two, the majority or all of your income comes from sources that don't withhold taxes, such as business income, rental income, interest, dividends, capital gains, you name it. So do understand, you don't have to be someone with a business to pay estimated taxes. You could be an individual, or you and your spouse could be individuals who just have W-2 income, but not enough withheld from those W-2 wages, so you would also need to pay estimated taxes. So with that in mind, the real questions to ask yourself are, what are the consequences for not paying estimated taxes during the year, and what can I do to avoid those consequences? So now that we have the right frame of mind, let's hop into it. The first thing we need to understand is about U.S. tax. See, the U.S. tax system is a pay-as-you-go tax system. And here's what the IRS says that means. You need to pay most of your tax during the year as you receive income rather than paying at the end of the year. And if you don't do that, then the consequence is you may owe a penalty with your taxes when you file. For example, let's say you're going to make $100,000 of income during the year and you're going to owe $15,000 in taxes on that $100,000. The IRS would like you to estimate and pay in that $15,000 during the year via withholdings or estimated taxes. They're one and the same. And if you don't, or you pay too little, the IRS may assess a penalty on what you underpaid. Okay, so I think we got it. If we underpay our taxes during the year, or we don't make estimated taxes during the year if we owe them, we may owe an underpayment penalty. Great. So what can I do to avoid that consequence of a penalty? Well, to be honest, the answer is relatively simple. The IRS gives us a few methods to avoid this penalty. So here's what the IRS says you need to do in order to avoid this penalty. They say, generally, most taxpayers will avoid this penalty if they, 1, owe less than $1,000 in tax after subtracting their withholdings and credits, or 2, they paid in at least 90% of the tax for the current year, or 3, they paid in 100% of the tax shown on the return for the prior year, whichever is smaller, 90%, 100%, or $1,000, whatever is smaller. If you make over $75,000 of adjusted gross income as a single filer or $150,000 of adjusted gross income as a married filing joint filer, substitute 110% for 100%. In other words, instead of it being 100% of the prior year's taxes, it's 110% of the prior year's taxes that you'd want to pay in. So here's what that looks like. Let's say you owed $10,000 on your prior return. Let's say your prior return is 2024. That means in the current year, year 2025, I'd want to pay in $10,000 in taxes, 100% of the prior year's tax, in order to avoid this underpayment penalty, or 110%, maybe $11,000 to avoid this penalty. And it does not matter if I make significantly more money in tax year 2025 compared to tax year 2024. As long as I paid in 100 or 110% of 2024's taxes, I will avoid the underpayment penalty. Or if I pay in 90% of the current year's taxes, so 90% of 2025's taxes, I'll also avoid the underpayment penalty. So let's say I'm going to owe $10,000 in 2025, as long as I pay in 90%, $9,000, I'll also avoid the underpayment penalty. And as another quick side note, if you owed 0 taxes in the prior year, so in 2024, let's say you owed no taxes, $0, you made no income, you had a loss, whatever it might be, you will not have any underpayment penalty regardless of what you pay in 2025. Even if you make $1 million, it does not matter. You owed 0 last year, so there's nothing for an underpayment penalty to be assessed on. So going back to the original question, which is, I started a business, do I need to pay estimated taxes? I get asked this all the time, but understand, it really depends on a lot of factors for your business to determine if you even need to start thinking about paying estimated taxes. So the first thing to consider is, will this business actually be profitable? Because if you're going to be returning a loss from this business, in other words, your expenses exceed your income during the year, or even if you break even, your expenses and income are the same for the year, then there's no additional tax liability that's going to be incurred from this new business. In fact, if you have a loss in the business, it's going to reduce your taxable income. It's going to reduce your income on which you're taxed, thus meaning you're going to owe less in taxes. So you definitely wouldn't need to pay estimated taxes based on this business entity that you've created. The second thing to consider is, even if my business is going to be profitable, if I have income sources that are withholding taxes for me already, like W-2, pension, Social Security, whatever you have, and that is going to be enough to cover 100% or 110% of the prior year's taxes or 90% of the current year's taxes, I once again don't need to worry about paying estimated taxes based on this business income to avoid an underpayment penalty. And the third thing, like we discussed, if you didn't owe any taxes last year, say you had $0 of income, you don't need to worry about paying estimated taxes to avoid an underpayment penalty this year because, again, you owed no taxes last year. It does not matter what you owe this year. All of that said, you may be in the boat that you don't really care about the underpayment penalty as much as you just don't want to owe at tax time. You just would rather get a refund or maybe a little bit that you can carry forward in the future years. You don't want to have a big chunk of money owed in April. I get that. Still depends on a couple factors, such as will you actually be profitable in this business, and how much withholdings do you have elsewhere. But let's say that your business is going to have a substantial enough amount of income to overcome the withholdings that you have, or you have no other withholdings, then this would be a good time to sit down with your accountant and say, hey, what do I need to do for estimated taxes? Can we estimate my income? Can we project out for the rest of the year to see what I'm going to owe so I can pay in some taxes during the year and I don't have a big tax bill come April? That would be what you want to do for that instance. Last few things to keep in mind for estimated taxes. So even if you do pay in 100 or 110% of the prior year's taxes, you actually may still owe an underpayment penalty. Because if you don't pay in your estimated taxes timely, you will still have underpayment penalties accrued. So your estimated tax payments are due on April 15th, June 15th, September 15th, and January 15th of the following tax year. So if you were to pay all of your estimated tax payments on December 31st, you would not be late for the fourth quarter, but you would be late for the first, second, and third quarter, which means you would have an underpayment penalty assessed on quarters 1, 2, and 3 based on the days late. So, in my opinion, the best way to avoid the timeliness issue that comes from making manual estimated payments is if you have sources of income that withhold taxes, a W-2, pension, IRA, you name it, those withholdings, those estimated tax payments for the year, get spread out evenly across your tax return, really regardless of when they've actually been made. So if you started a new job and the payments didn't really start going in until August of the year, does not matter. They're looked at as having been paid throughout the year because the IRS doesn't really break things down in that way. So if at all possible, rather than making the manual personal estimated tax payments during the year, if you have the option, I would recommend increasing withholdings in one of those sources of income. So that way your estimated taxes are all paid in that manner. It's much more timely. You don't have to worry about missing an estimated quarterly payment date. And this way too, it's out of sight, out of mind. You don't have to worry about it anymore. But do understand this. Even if you have missed a couple of estimated tax payments for the year, let's say you missed the April 15th and June 15th quarterly tax payment, and you don't have an income source that withholds taxes for you, I would still recommend, if it's all possible, go ahead and catch up on the missed quarterly payments as soon as possible to stop the bleed, if you will, right? Stop the accumulation of days that you are late. So get yourself caught up for those 2 quarters, and then just be ready for the next quarter coming up to pay that one timely. Typically speaking, once your return is finished, your accountant will provide you with 4 quarterly estimated payment vouchers based on your prior year's tax return. You can use those to catch up on your estimated taxes. They're going to assume, hey, if all things basically remain the same as last year in terms of your withholdings or what have you, paying these estimated tax payments, you'll avoid an underpayment penalty. Utilize the numbers on those to make your payments. But know that those aren't sent into the IRS. They're not filed anywhere until you file them if you wish to. They are just an estimate based on the prior year's taxes. You're not beholden to those numbers. So in the same vein, if your income's dropping a lot, you don't need to say, well, I have to pay in this estimated payment voucher that my tax preparer gave me. No, you can certainly pay in less. And the ways that you can pay in your estimated taxes are either online, irs.gov/payments. You can just go make an estimated payment towards whatever tax you're looking to make and pay it online. You can pay whatever amount you want. It does not even have to match the estimated payment vouchers that you receive. Because again, those aren't filed anywhere, just for your information. Or you can use those payment vouchers provided to you. And if you're going to make 2 at one time, just put 2 together and send them out. And if you're going to change the number, scratch it out, put it in a different number. It's totally fine. You can use those, write a check, send that out to the IRS. Those are the 2 ways that you can make it. My best suggestion is make it online if you can with the irs.gov/payments. It's the easiest way to make sure that you have it confirmed, the IRS received it, it's timely, and you have good records of the payment that you made. And understand this, if you need to make payments more often than every quarter, like, oh man, I always forget what the dates are, then just make it more frequently. Make it every month, make it every 2 weeks, whatever works best for you. Make it in a way that you are going to be consistent in making that payment. The IRS doesn't care how often you make your estimated tax payments. They just want them paid in timely. So if I make 3 payments towards 1 quarter over 3 months, that will still be timely and on time for that quarter. I will still be good to go. So make the payments that you're able to make in the time frame that you're able to make them, so that way you can avoid as much of or all of the underpayment penalty for the year. And the last note is this. For more information on how the underpayment penalty is calculated, you can head to this website by the IRS, and I'll link this in the description. Because unfortunately, the calculation for the underpayment penalty is a bit more involved than just a number times a rate. This is how the IRS says they calculate the underpayment penalty. The amount of the underpayment, the period when the underpayment was due and underpaid, and the published quarterly interest rates for underpayments. And do understand those interest rates change, generally speaking, on an annual basis, sometimes during the year. So as you can see, it's a bit of a tough calculation to make in order to determine the amount of underpayment penalty you're going to have. But don't let it keep you up at night. It's not going to be an astronomical number. It's a percentage of an amount of taxes that you underpaid during the year, and sometimes underpaid for a certain amount of time. So again, don't let it keep you up. Don't let it stress you out. Just get yourself caught up if you want to, so that way you don't have much of an underpayment penalty that's accruing for yourself during the year. So in summary, do you need to make estimated tax payments? Sure, if you're going to be under withheld for the year. And the consequence for not making estimated tax payments is an underpayment penalty. And that's it. If you feel that that underpayment penalty, let's say you incur it every year, and you have felt that that penalty is not worth you departing with your money ahead of time so that you can maybe invest in your business or do whatever you want with it during the year. Penalty is not significant enough for you to depart with your funds during the year. That is totally fine. The IRS will not come knocking down your door looking for those estimated tax payments. You're just going to have that penalty assessed year after year. And do note, for those who are on like a certain type of payment plan, like maybe an offer and compromise with the IRS, you do need to keep up with your estimated tax payments, because the consequence will default that plan. So do make sure that you're keeping up with it. But for the majority of people who don't have that, the only consequence that you're looking at for not making estimated tax payments is an underpayment penalty. Thanks so much for watching. Be sure to like, subscribe, comment, and hit that notification bell. I hope this video has been helpful, and be sure to follow me on TikTok and Instagram, where I give other short form tax content on there, and hopefully be able to answer some of your questions about things. Once again, thanks so much for watching, and I'll see you on the next video.